And a very good morning to everybody, and I hope you are safe. You are dealing with this whole horrible situation as best as can be expected, and your trading has been good. My name is Andrew Horowitz. I am the co-founder and co-owner of TriggerCharts, where we put some of the best charting and technical analysis on the TradeStation platform for you to use. And you've been following us for a while now, and hopefully you've had the opportunity to check out all of the various indicators that we have that really can do a lot for you and help your trading in a great way. You know, it's interesting. I received 2 different calls this week from people that said, I don't understand. You know, how is it that this is so accurate? And I said, well, it's based on some pretty basic philosophies of utilizing volume and price, and looks for where those areas that we have in a substantial accumulation of volume and any price on a chart. And it's not really magical. What it is just pretty obvious. It's where investors are looking to place their money and where they're looking to place their bets. And what happens is that those lines that you have on the chart and the colors that you have on the chart represent those levels. Where there's no interest, where there's no activity, it's an area where you can find a substantial amount of opportunity. So again, it's not necessarily a secret sauce, although the way we generate these is kind of a secret sauce, but it's based on a very solid methodology that provides for all of this. Anyway, before we begin, I want to make sure everybody knows that this is for educational purposes only. It is not a recommendation to buy or sell any security of any sort, because of course investing involves risk. And again, these are not recommendations. You need to use your best judgment when investing. So do me a favor. We've been having a little bit of problem. I think it's on the side of Zoom with some of our polls. I'm going to launch a poll. I want to make sure this is a test, so please participate. This is a test of the poll of what time frames do you prefer right now in the markets? You should see something flashing on your Zoom control bar that popped up. Well, it does work, it seems. Well, that's good news. Well, keep on filling it up. We'll figure out what everybody's is looking at in terms of what they're utilizing right now. Because I have some comments on this, actually. I think it's really important to understand that in this kind of environment with a very substantial amount of volatility, that there are certain things you should be looking at and certain things that you should be concerned about. We're going to leave that up for about another minute. Make sure everybody does the poll. Let's talk about what's going on. Let's give you the weekly update as I see it. Right now, we are in the midst and the continuation of a headline minefield. The ability for the administration or others to tweet and comment and talk and just try to do what they can to either lift or break the markets, whoever's out there on the short side, is really substantial right now. As a matter of fact, it seems that the sensitivity of the market to these kinds of headlines is really high. The one that we're dealing with right now over the last 2 days is all about oil. President Trump tweeted that, yay, I talked to Saudi Arabia, who talked to Russia, or I talked to Russia, who talked to Saudi Arabia, and you know what? They're looking to do a substantial cut of production. Yesterday's announcement first started with a 10 million barrel per day cut of oil by OPEC. Okay, oil spiked, started coming down a little bit, and then right after we saw that fade start to occur and oil to come back in, Trump tweeted, you know, I think it's going to be 15 million barrels per day. So what we're seeing is that there is a desire for oil to be higher because that will help some of the refiners, the drillers, you know, the whole entire oil patch will do a lot better because right now, on top of what's going on with this whole coronavirus, we have the fact that a lot of areas in the energy patch are being destroyed due to the fact that oil down at what, $20, $21 was really problematic. There was no way for them to make any decent money. And oil moving higher has been very important for the markets because the energy sector has been so depressed that the idea of them having a better profitability on this has been holding up the markets, even though we're seeing some really ugly economic numbers. We're also seeing the VIX start to resolve a little bit lower. It's right about 49 right now. That is showing us that there is some kind of semblance where we're not waking up to a market that has been halted due to volatility at the limit levels of the day. So we haven't seen that in a little while, and that's good news. And maybe what's happening here, and you may be scratching your head to say, wait, look at this horrible information that we've seen throughout the week. Why aren't markets reacting? Because it's not a surprise. What markets really react to in their greatest degree are surprises. Look at what just happened with oil yesterday. Up dramatically, like 23% yesterday, up another 12, 13% today. That's because that was a surprise. There is no surprise that people are being laid off. There's no surprise that businesses are being shuttered. Markets like to get ahead of all this. Now, the surprise will be if, in fact, we see that this goes on a lot longer, earnings are impacted much more intensely, and the fact is that people maybe will not get back to work. Those will be surprises. But it's important, and I think we do want to look at things like the VIX, the volatility index, and as that comes back in, while we'll still see significant volatility, that doesn't mean we're not going to see a 300 to the top on the Dow and 300 on the bottom in any one given day. But maybe the days of a 12% or 10% loss on an index are kind of behind us. That doesn't mean individual stocks won't get a little bit whipsawed throughout this, but realize that right now, a lot of people are looking at this and saying, oh, these levels, look how much the indices have gone down. There's this number that was floating out there, this 2450 on the INX. Maybe it's time that we should start getting back in. And we're going to go over a chart, as a matter of fact, that looks at that and looks at investor psychology and the cycles in a moment. So again, right now we're looking at economic data. We're assuming the worst. Today, there was some numbers that came out. 700,000 jobs were lost. That is a lot more that were expected for this particular report. 6 million yesterday was a lot more than was expected for that report. And it's all about the timing of when the data is collected. When we look at how many jobs will be lost, we're probably going to see another 10 million jobs lost. Right now, the unemployment rate, if you calculate where we are, considering the initial claims that have been put in as of yesterday, is somewhere around 8.8%. Now, we only saw about I think it came at 4.4% today or so. And that's not including all the data from this week's initial claims. So next month is really, we're going to see the spike in the jobless numbers on the unemployment report. One of the problems that we have right now is that the only income, the only revenue that a lot of firms have, especially in the area of small business, that's been shut down due to mandates by the states, is that we have this stimulus package. The problem is that we have a slow rollout and glitches all over the place. The PPP, the Payroll Protection Program, that's been out there trying to infuse money into businesses, if in fact they hold on to their employees, a lot of this will be forgiven, has been very slow to the rollout. Supposedly it's coming out today, but a lot of banks are saying, you know what, and that's where you have to go through. You have to go through the banks, through the SBA, to get these loans that will be forgiven under certain circumstances, are still not rolling out with this. Even though Treasury Secretary Mnuchin said, yeah, that's going to come out, you'll get an immediate deposit to your account. Not happening so fast. The SBA disaster loans and grants that were up to $10,000 that were available starting last week, I can tell you, they're not working so well. You don't get a response back from them on the application. You don't see any kind of information about where it is in the process. And they've already asked people that have applied originally to reapply again, because obviously there's some glitches in the program. The one-time checks, the $1,200 per person that makes under a certain amount of income on an annual basis, and the $500 per each child, up to 2 children. It's going to take up to 3 weeks. So they said 2 weeks now. If you filed your 1040, your tax return, and you had a bank account number on there because you were due money back, and that's in the system, potentially 2 weeks from now, you'll get some money. If, in fact, you do not have that, they're supposedly putting up, they haven't done it yet, they're putting up some kind of a website where you can put your banking information in, and if that fails, then they'll send out checks. They really don't want to send out checks due to a lot of potential, well, let's say, problems in the system, that maybe checks go to the wrong place, you moved, somebody steals it from your mailbox, and that will take 3 to 5 months. And moreover, the unemployment sites, the state unemployment sites, where you're going to put in your unemployment claim and hopefully get some kind of state unemployment insurance, and then on top of that, get the $600 per week, they've been crashing too. So a lot of things that are going on right now, but here's the point. People need that money. That money is the essence of how to keep people at least possibly working, businesses open, and people getting enough money to buy food and groceries and everything else they need. All right, so where are we otherwise? Well, the quarterly rebalance. We talked about that last week. The quarterly rebalance that we talked about that really did show an incredible amount of movement into stocks. That big week a couple of weeks ago that we saw should be about completed now. Maybe we'll have that through the end of this week, but generally speaking, I think that's kind of over. Yesterday was the best day ever for oil, and that helped the market rally. Again, we're seeing it fade a little bit this morning on the right-hand side here. We're seeing that there is, right about here, see that, if you can see that? We're seeing that oil did rally up about 15%. USO is up about 15%. This is the ETF that tracks oil. We can look at the commodity as well, or the future. But right now what we're seeing is that oil is, in fact, fading a little bit down. And there is some hopes that OPEC will do something and come out with some announcement. But again, this was because of this tweet of 10 to 15 million barrels per day cut. And now we're seeing some additional headlines that are coming from places like Russia that says, you know, hey, if you cut, we'll cut. So we'll see how much they cut. Saudi Arabia dismissed the idea of a 15 or 10 million barrel per day cut, said that number is severely exaggerated. So let's talk about the virus for a second here. We know that China's numbers can't be trusted. We know that America is, unfortunately, #1 in infection rate, and that's due to some of the excessive testing that we've done, although our per capita testing is still not where it is of, let's say, South Korea as an example. But the testing in U.S. is driving an increase in the case count, and you can follow that on a daily basis. Right now, one of the things that rocked markets this week was the idea that the best guess on the amount of deaths that are going to be from now through August from this is somewhere about 100 to 240,000 U.S. lives. And we're seeing that a lockdown of about 80 to 90% of Americans, and that is one of the problems right now with the economy and the question about how long is it going to take for the economy to recover and for everybody to go back into their job. Let's take a second here and end our polling, which did work, and I'll tell you what your answers are. So what time frames do you prefer? So about 42% said under 10 minutes, which is kind of interesting. 11% said 15 minutes, 11% said 30 minutes, 11% said 60 minutes. Nobody used a 240, which is also interesting, and 26% said daily bars. Daily bars. So the top two answers are under 10 minutes at 42% and 26% for daily bars. In this environment, you have to use shorter term bars because the longer term bars, you're maybe 90 minutes, your 240s, they're not really showing you anything due to the volatility that we're seeing. Daily bars are okay, but I would stretch if you're doing some swing trading to weekly bars. Because right now, again, your volatility is really compressing your charts on a daily, and it's not showing a lot of really good information from support and resistance, and I really would stretch that out a little bit. Right now, the futures, we're seeing that 125 down on the Dow Jones Minis, and we're seeing the S&P SPOOs down 10, and the NASDAQ futures down 24. Not too bad considering this massive number of unemployment that we've seen, but again, that was expected. Bond spreads still widening, but settling down. And the good news is that this week, traditional correlations are working much better. That's because the Fed is really going very strongly into the bond markets, whether it is the investment grade, corporate markets, the treasuries, possibly even buying some munis. So we saw this plus 6 million. We talked about that. Next week, we have PPI, University of Michigan, industrial claims and wholesale inventories. I want to bring this chart up for a second here and just show this to you. And the big question is, where are we on this chart? You look at the stealth phase of a rally and a major blow-off of the rally towards the end. Let's take you through that really quickly. We start out in this phase where smart money says, hey, there's some great valuation in the markets right now. Then we get into this awareness phase where institutional investors say, you know what? Hey, maybe there is something here. We have the momentum that's going. We have some valuation that's happening. We see investors are starting to nibble in and buy some bonds. and then it starts to move up. We get a little bit of a bear trap right there, thinking, hey, you know what? That sell-off is going to be a bear trap. And you got to wonder if where we are right now is either a bear trap from the sell-off that we saw last week, or we're in a bull trap right now, which I'll share with you. So we get into this public enthusiasm. We get to the new paradigm that, hey, you know what? We're never going to see a down move in markets again. We're never going to see an economic cycle again because the Fed has our back. There's a new paradigm out there. People are just buying stocks. It's the only place to invest, or whatever the particular area is. We get this delusional and greed phase, and then when the market comes down, we get into a denial. So is it that denial that has people saying, you know what, this is going to be short-lived, it's not going to be a problem, we're going to get back to work, markets are going to get back to their highs, stocks are going to be able to make back their money, it's a temporary setback right now, that some of that's going to be alleviated by the government. So are we there? Whereas we are back to normal, we saw that big rally, or are we somewhere in a bear trap? If in fact we do follow other types of recessionary environments that lasted a while, and again, this one has no history to look up, it has no analogs and analogies to look back. There is nothing right here to compare this to. So are we here where we saw that pop a little bit higher? And you see a lot of charts that look like this. They moved up, they came back down, and they moved up a little bit, and then they started rolling over. So if in fact we are following this pattern, if you want my guess on where we are, it's right about here. That's where we are right now. The question is, do we go down and follow this curve? And again, it doesn't have to be this deep. It doesn't mean we're going to go down another 30%, but are we going to follow another move lower moving forward? I think that the odds are that, yes, we are going to possibly have this particular situation that is going to grow more and more concerning depending on how long this lasts. Right now, it looks like April 30th is the time period that we're showing. President Trump came out and said, you know, we were on a 15-day deal. Now we're going to extend it by another 30. So we're on a total 45-day cycle to end the spread. We're going to be talking today about crude oil and Zoom, Media, Shopify, Boeing, Jets, and all these stocks. We'll get there. You could put your, I'm going to type it in. Right here, if you see the chat, you could type in your symbols and we'll take a look at those. Let's go through that. Let's see what the KRI is. I think this is pretty interesting. Never before, since historical reference, have we seen so many magenta lines, so many oversold levels in that. And look at our chart that we showed you before, right? That chart where we went up and moved higher and higher and higher. We get that sell-off. Possibly, you know, hey, it's not really happening. Another sell-off. Hey, maybe it's not really that bad. Starting to get into another sell-off region here, and you got to wonder if we're going to test those lows. This is on the S&P 500, down below the 218.50 level or so on the next move lower. That would be another, what, 8% lower from here? Something like that. Not really hard to envision that happening. Right now, we're a little bit on the oversold level, but not much. Markets are generally in equilibrium when it comes to the key reversal indicator. All right, let's go to our charts. Crude oil down, up only 8% now. We see the market fading a little bit into that. This is what crude oil did. We had a great opportunity to get in right about, this is on a 60-minute chart. I can show you this on any minute chart. Let's take this down to a 30-minute, which will probably give us a better inside. Yep. We saw that the crude came in about 22.59. You kind of moved out of it about 24.40, about a 10% gain. Brought you back into it at 24.46. Moved back up to 26.77. 26.44 got you out. Was again in today. Where was that? What time was that? Let's see. 8 a.m. as it started blasting off. I'm sure also even on, let's call it a 15-minute time frame, you have some great opportunities. Probably get you in a little bit earlier. 22.30 still. Got you back out at 24. So not that much different, a little choppier. I would stick to a 30-minute time frame when it comes to oil right now. I think it's an interesting place to look for scalp trading. If you want to get a little bit longer, obviously, we can look at the daily, which on the right-hand side here, which really is an interesting view here. You have potentially up to about, I would say, 31, where there really isn't any range. There's a lot of distance in this altimeter off of a very significant amount of basing. Really had a tough time getting below this 21 level. Then it did settle in right about 2044. Couldn't really break that. We're seeing that the aileron is showing a divergence where it's moving higher. And if we stay here, we're probably going to get above or right at the zero line moving forward. So I think that's really interesting in terms of oil. And you could track that with USO2, which is the ETF that tracks this, and pretty much same. Doesn't really react as much because now we're not showing you a 24-hour commodity cycle, showing you only a market hour cycle. So still got you in at about 426. And you would have seen that if you look to your left, there really wasn't a lot of resistance there, possibly right here. But even if you missed it and got in somewhere on the breakout, you went from about 426 to 507. So about an 80 cents, so about a 20% move on crude oil on that move. That was pretty substantial. On the daily, not showing much here, but there is a resistance about 687 on this. Not, again, this is because the timing is different, but if you used USO as a proxy for the crude, if you don't trade futures, this could have been really a decent trade. Zoom Media, the favorite of the stay-at-home crowd, was at about 160 a few days ago. Then some news came out, a few other things happened. The good news is that you look at this, and we did have a lot of chop. I did not personally see any particular reason to see that there was a long-term trend, even though it went from 90 to 160, which is almost a double there. Back to February, the trend was much higher and doing well. Very strong trend on the upside. Very choppy movement on here. Didn't really get a good call. If we take this, though, and again, expand our... this is too new, this stock. Hasn't been around that long, so we're not going to get any weekly numbers. But if you expand it out, if you did, I think you'd have a better opportunity. Shopify, a stock that was, really the darling of a lot of people for a long period of time, went from 284 to, where are we? 593. There's a beautiful run for you. Gap out on an earnings announcement. Earnings announcement came out yesterday. Gap down on that. Right now, basing out. You start to draw your lines and you see that, okay, well, about 329 is some support. Maybe, give or take a couple points. That's kind of lined up pretty well. 329 is some support. It did get some support over here if you look at this range. And what I like to do, like that I like to do, I like to kind of put a quick line in there and see what we had. We did have support on that market meltdown there. Did climb up pretty substantially. Now moving down because realization is hitting in. This is a classic example of that chart that we showed before with that whole investor greed and new paradigm and then a realization phase coming in. Where does this go on the downside? I think if you were to want to say, okay, where's a good place? About 300, I would say, has some support there. If we go back further, it's probably a lot lower. But, you could probably draw it right about here, right about there we go. 295 is probably the number that we would look at there. I'm going to just make this a little bit bigger so we can see it. There you go. On the left-hand side, 294.42. Boeing. Boeing. There's your chart again. We got that drop. We had, things are going to get better. Now we have the drop happening again. Up about 1.78% in pre-market. But, a lot of the airlines are not going to be buying a lot of planes due to the fact that they have restrictions on cash spend due to the fact that they have no planes flying or very little planes flying. So Boeing did get some defense contracts, about a $900 million one yesterday. And you'll see that continuing to flow in from the government. But there is some support. Let's kind of zoom this out. And I want to go to a weekly on this. Again, try to go a little bit longer. So when you look at the weekly, we do have a new altimeter that was drawn. You can look at that pretty easily. And you can see that there is a new range that was drawn right about there on a weekly. You really do have to get above. Oh, my drawing skills are not doing well today. Let's just use a line on this. There's a lot of room to the left. You see there's nothing there. So 193 is really an important number, I think, to get beyond. Let's go back to our daily. We go back and forth all the time and look at that, see how this plays out. There's our 193 line. And you would say that that does make sense. We need to get above somewhere there, but there was resistance at about the 205 level. Right now, it does look like there's some support here about the 118 line, which is pretty much where it got to yesterday and bounced off that and started moving higher. Really good support down at the 99 and 100 level. I think that's a really important psychological level for Boeing. Thank you for answering those questions, Kevin. Jets, this is the ETF that tracks the major airlines, and it's, you know, got some support here at 1213, but if you think that the airlines are going to recover anytime soon, okay. But, you know, this is a good proxy for that, and I think that you want to look at the opportunity to take this off the lows, especially because we're starting to see aileron, which is a separate indicator, by the way. Aileron does not come with the package of the Commander series. It's an add-on, but I like to use it because it shows me the divergence, and this is showing a decent divergence on the way up. We're starting to see a little bit of a roll right here, but still not as deep as what we saw over here, which confirmed our downtrend. We're still in a downtrend. There's no question. We have a lot to do to break that downtrend, and from going back, I mean, look at that. It's just horrible. Up to 32, down about 65% for the year. So you got to watch that. McDonald's. McDonald's holding its support really well on a daily basis. Did see a nice lift off of some of its other side, getting a big boost on the aileron on a 30-minute chart yesterday. Started to move higher. It seems like it wants to get to this 162 level, down about 1% in the pre-markets right now. But again, we'll see how that plays out. It does look like this 155 level is some decent support, but I don't know how long that really goes back, because you have to look, these charts, there's a lot of volatility baked in. I mean, just look at this situation. Right now what we have is, when we look at the levels, I mean, there's nothing there. It's blank space. That does two things for you. It benefits you if we do see a move to the upside. There's really not a lot of resistance, but it also hurts you on the downside if this thing does move down. That's why you want to take smaller positions right now, because volatility is high, so you don't get spooked out of your positions. A couple others, Luckin Coffee. I talked about this for a while. Then we came out of the trade and didn't get back. Almost a perfect head and shoulders pattern right here. And then yesterday, there's some fraud that was announced. Stock was as low as about, I think, $3 in $3.50 in the pre-market yesterday, from 25 the day before. Once you get these Chinese companies, if in fact there is some kind of hanky-panky going on, you got to stay away from a while. You could have got in somewhere about $4.50 yesterday, and then, you know, that's a nice trade, but you got to wonder what's really going on and what skeletons they have in their closet right now. PLNT, this is Planet Fitness. We think there's some downside that is baked into this as the structure of the company and what the company does, which is gyms, of course, a lot of franchises. The stock moved up from 27 up to about, what, 54, almost 100% move on that upside when the markets rallied. I would venture to say that there's a really good amount of support back down at 27. If you do break this level, which we are getting really close to, came into it yesterday and bounced above it. Raw Stores, I'll just look at that real quickly. Raw Stores seems to have the opportunity to benefit from some of the foreclosures and bankruptcies of the major players out there, like Macy's and any of the other stores. Looking at some of your stocks right now, I don't know if we looked at this lately. Coca-Cola? Coca-Cola bouncing off its midline on the daily. Got to get above 45.5 to get some clearance in this area of the no zone. Seeing a nice level of divergence here to the upside, starting to change a little bit. That's good. What else do we got here? Infi Corporation, you know, holding up pretty well. Got a little bit of resistance to move through right here. You got to get above. There's a lot going on here. Hopefully everybody sees this. When I draw this right here, there's just a lot going on in this range that you really need to break out of. It seems that there was a big reversal on a breakout. You really got to, in my opinion, I think we've had this stock a few times mentioned. It seems to me that you know, you have to wait for this to get to the next level before you can see an update. Somebody's asking about GLD, so we have that on our list. GLD hitting some resistance right here. Look at that big resistance line at 152. Did drop off when everything was being sold before. I think we got to all the stocks there. IBM, you got a lot of work to do here. It's not looking good. You got a lot of resistance right here at the 115 mark, so we'll see how that goes. Anyway, make sure to check out all of the indicators that we have available over on TriggerCharts. You have a 10-day free trial for all of them. And if you do subscribe to the Commander Series, we'll give you a 4-hour free online training course that is really great, a timeless training and coaching session that is online that you can see at your leisure. Until next week, I hope that you trade well. We'll be here. Make sure to load up some of the stocks that you have and your thoughts that we'll look at next week. Bring me some new stuff, some things that you're looking at. Do some research. Go through the charts. Find some things that look interesting, and we'll go over all that next week. Until then, thanks for joining me, and I'll see you soon.